morning. My name is Michael Heim, and I'm the energy research analyst for Noble Capital Markets. Today we have with us enCore Energy, and specifically we have Paul Goranson and William Sheriff, who are going to give a presentation on their company. So with that, I'm going to turn it over to Bill to start the program.
Thank you, Michael, and welcome everyone to NobleCon. I want to introduce you to enCore Energy. We're a domestic U.S. uranium explorer and developer. The usual disclaimer, I want to give you a little bit of the background on the company. First, we came out of Energy Metals Corp. For the most part, which was a very successful uranium company in the 2005 to 2008 cycle, which was really the last uranium cycle we've had. So we're well overdue. But we brought that company up from below $2 million to almost $2 billion and sold out to Uranium One. After a short period of time on the board, many of us left to start enCore. We've got essentially the same technical team we had at Energy Metals, with the noted addition of a couple of members that I'll get to on the board, and especially Paul Goranson, our CEO, brings a wealth of experience. Once we got started, our timing was not particularly good. It was right before Fukushima, so the company was actually in a hibernation or a bit of a hiatus for a better part of a decade. And even took the unprecedented step of sending out a note to shareholders telling them that for 5 to 10 years there would be no interest in the sector following Fukushima. And unfortunately, or fortunately, whichever, it turned out to be correct. It wasn't until, so we basically went into a period where we'd acquire assets when we could, very frugal, maintained a very, very tight rein on the checkbook. And it wasn't until really about a year ago that we began to see the markets changing, the fundamentals and the supply-demand metrics for the long term looking very favorable for uranium. And then last summer we shifted and decided to jump into it with both feet and really move forward with the company. And we made a transformational transaction with Westwater Resources, just closed at the end of this last year, 2020, on the last day of the year. And that saw us pick up 2 key production plants. There are only 11 ISR plants in the U.S., and we were able to own 2 of them through that transaction. Also got quite a few assets both in Texas and in New Mexico with historical resources, and really put together the base for our expansion plans and really got us going. Our entire focus is on domestic ISR production. And with becoming an active company, one of the first and probably the most important key things to add was the team leader. And as I mentioned, Paul joined us about 4 months ago, and really glad to have him on board. You'll hear a bit more from him in a few minutes. The supply deficit I wanted to mention that we see emerging, the pricing that should be good for the next cycle, is really growth in demand along with curtailment of supply are the 2 biggest factors in my mind. You've also got a number of other factors that are certainly providing very strong tailwinds to the story, that being the U.S. stockpile program that was recently announced. With the Biden administration coming in, the new green energy plan certainly is going to have an emphasis on nuclear, as you just can't get there with wind and solar. You just cannot do it, especially the base loads. Russian suspension agreement also very good, and obviously some other developments such as the modular reactors that are coming on, the small modular reactors, which are aggressively being developed in a number of companies and a number of designs that certainly will increase mid to long term demand in the uranium business. And not I don't want to fail to mention also the safety advances in full size reactors that are coming along, such as fuel rod design and that sort of thing, that are essentially making it almost meltdown proof. So we're really getting into multiple generations of reactor designs, and the safety factor is quite a bit. So now on to some of the details on the company. Just wanted to, if you could back up one there on the slide. There we go. Just wanted to talk about the company a little bit. We've got a clear focus to become a premier in situ uranium producer in the U.S. It's led by a very experienced technical team. I'll introduce you to those members shortly. And as I mentioned, it's advancing on our 2 production plants that we picked up. Here again, the whole key to it is timing, and we see the uranium market really coming on. We've had a very nice few months, so we think the next few years is going to be even better, and we've just really started the cycle. One thing I wanted to mention on the slide, we do have an inaccuracy there. It says pending acquisition of 2 licensed plants. That did close at the end of December, just a typo on our part. We do have 43101 43101 resources in New Mexico that are ISRable, as well as a large number of historic resources that were done by major oil companies, so they're done to a very high standard. Nonetheless, we will have to do a bit of work to bring those up to 43101 standards as we progress. Also have significant holdings in Arizona, Utah, and Wyoming to go along with our bases in Texas and New Mexico. And we have our share capital structure, $174 million market cap, about 178 million shares outstanding. You can see the warrants and options there. Fully diluted is right at 200 million. About half of our shares are held by institutions, and about 10 to 12% is held by management, with the rest being retail. And of course, with the volume metrics we've seen lately, that's subject to some change. Now for what we view as our principal asset, I want to talk to you in detail about our people. I'd mentioned Paul, and you'll get to hear from him shortly. He's either dealt with, built, designed, or operated just about every in situ plant in the United States. I've been in the business over 30 years. Has done, previously was the president of Cameco US, and with Energy Fuels as chief operating officer. Anyway, his experience is really unparalleled, and we were very, very fortunate to bring him on. Our chief technical officer, outgoing CEO, Dennis Stover. Dr. Stover was one of the original pioneers in the ISR business, actually holds some of the original patents on the process. Richard Cherry, formerly with General Atomics, has also worked with Energy Metals in the past and did a lot of our contracting with the nuclear utilities. Mark Paliza spent a great deal of time on these very assets we just picked up, as he spent much of his career with Uranium Resources, which later became Westwater. And Bill Harris joins us is in a non-technical role, but nonetheless very, very important to us. He's our audit committee chairman and formerly chief executive at Hoist Fibers, part of the Celanese Corporation. We brought him on board to handle the Sarbanes-Oxley requirements when our previous company went to the New York Stock Exchange. And Nate Tewalt rounds out the board. He was president of Standard Uranium during the last cycle and also involved with Energy Metals. We've got a very strong technical consultancy team. I'm not going to read them all to you, but Doug Underhill's got 40-some years experience, a good deal of it with the International Atomic Energy Agency, author of many, many articles. Gordon Peak, our landman. Joe Harrington is one of the more accomplished folks in terms of reclamation and has won awards for it. And of course, that's all part of it. And so I think with that, I'd like to turn to just a little bit of further discussion. Management and technical expertise, I've spent a lot of time on it, but it really is the foundation and may well be the rarest of all the ingredients in the uranium business. The world's had decades of identified uranium resources ahead of it, so exploration's not really the focus of our company. We think the real key is the severe shortage in technical ability to actually monetize, materialize, actualize those pounds, get them from the ground, produce them, market them, and sell them with a keen understanding of the fuel cycle, which goes all the way from permitting through production to conversion, enrichment, fabrication, and then ultimately closing of your plant and reclamation. I think there are very few companies, especially small companies, that have that entire fuel cycle covered to the degree of expertise that we do. So I think that's really a key factor when you're looking at enCore. And I'll let Paul tell you about our major assets in general, but as I mentioned, we've got 2 800,000 pound a year in situ plants in Texas, one of which is very within 12 months and a modest expenditure could be ready to operate. Certainly in New Mexico for a long-term focus of the company, we've got the commanding position in what has historically been the largest uranium producer by far in the U.S., the New Mexico district. We don't view that as coming into a real importance for the company for probably 5 years, as we've got an awful lot of community work to do there. There's been a legacy in New Mexico where the uranium industry has not been particularly well received due to much of the old boy attitude of the way things have been done and the way the government had treated folks there. So we've got our work cut out for us, but we think we can do that. It will involve a certain amount of equity participation, doing more for the local communities than building a gazebo in the park. But nonetheless, we'll be dependent upon them to provide much of the labor, et cetera, for moving these things forward. And really look forward to the challenge, but it is going to be about 5 years out. In terms of other assets, we've got several non-core assets in the uranium business. As I say, we're focused exclusively on ISR in the United States. And we also have a 40% interest in Group 11. Won't spend much time on that other than tell you it's an alternate leaching technology. It's basically applying our ISR expertise to the extraction and development of other metals. And it holds an awful lot of promise. A lot of research work has to be done, but we look forward to seeing how that goes. So without anything further, I'll turn it over to Paul, and he can walk you through some of the more detailed aspects of the company.
Thanks, Bill. I'm going to kind of start off by focusing in on our Texas assets. As Bill described, we just completed our transaction with Westwater to acquire both their Texas and New Mexico assets. But we see the Texas assets as being the closest to our short-term or near-term strategy to get us into production. As we mentioned, this is our transformational transaction. The Texas area, I've got a lot of, I've started my career in South Texas. In fact, at these the two major producing facilities or production facilities were acquired in my career, and I've seen Texas become a really strong production center in the near term. A lot of historic production, over 80 million pounds produced. Texas is an agreement state, so the permitting and licensing timelines are well understood. Texas is a very pro-business climate. And one of the things is that we know that there are a lot of prospective areas that we can go and develop in situ recovery facilities. And there's a lot of potential, as the USGS published back in 2015. Focusing on our production facilities, we've got in the top picture is the Kingsville Dome facility that's been around since 1987. It's in various states. It's got it actually acted as a central processing plant for the Vasquez production facility that is now closed and in the process of being decommissioned. And then on the bottom picture is the Rosita facility, which back in 2008 was completely revamped and was licensed to have drying capacity as well. So it has a dryer, has a full cycle for a central processing plant. And what's unique about Rosita, if you were to think back on the prior picture, it's kind of centrally located in what we see as the most prospective uranium areas within the Texas, South Texas region. The advantage of Rosita is that it never actually operated after being revamped. So almost everything's still new and in really good shape. And that's simply because of its location. It's well away from the coast. Kingsville is within 5 miles. Kingsville Dome is within 5 miles of the coast. So as you would expect, there's quite a bit of weathering. Whereas Rosita is 60 miles inland, relatively dry climate. And so it's in very good shape. Now, we'll take a little bit of work to get it up and running, but based on our estimates, it's going to be certainly less than $1 million, and I believe less than 12 months. So this is not my first restart. And the other thing, as Bill mentioned, some of our assets are people. We also, as part of this asset, we inherited an experienced and trained workforce that could help us get up and running. So it's exciting times. It's good to be back in the country this section of the country where I got my start, and it's exciting. There's a lot of opportunity in South Texas. In addition to the resources we acquired from Westwater, we have there's a lot of South Texas opportunities for exploration. One of the areas we look at right now is the Butler Ranch, which came with the Westwater assets, but it's primarily historic resources, and we need to do some work to confirm that using to get it to NI 43101 standards. What we've also received, one of the things that occurred just recently, is we acquired a large database of previously permitted and licensed facilities that never operated. In fact, they were, and we're looking to look at those resources, potential near-term uranium feed for the Rosita project. We also, as part of this, acquired a prompt vision neutron wireline logging equipment. The reason why that's important, in that lower picture, you can see if you understand geochemistry of the area, Texas has the South Texas area is very active on its geochemical nature where the uranium deposits. And having prompt fission neutron provides us the ability to in situ assays of uranium rather than doing traditional cores, which is important because of the active geochemical contacts. We have a lot of what's called disequilibrium, and this allows us to account for that, and it gives us more reliable data. Switching to New Mexico, I won't spend a lot of time on this because as Bill mentioned, this is our future. But it is important. With the Westwater transaction, we were able to secure almost the dominant position in New Mexico with respect to both mineral rights, known resources, historic resources, and it's really made complemented the package that enCore already had prior to that acquisition. And it's, as you'll see as we go through looking at some of these projects, you'll see how it truly brings, lack of a better word, ties the whole place together. We have significant resources in New Mexico. Obviously, we're working on updating some of our 43-101 work to reaffirm some of this, because now we can start combining existing projects we had and with projects we got from Westwater. Our priority in situ recovery properties are Crown Point and Hosta Butte. The beauty of Crown Point is already licensed, and it's under Laramide Resources license, and there's a lot of history as to why that happened. But this is a prolific area for production, and it's interesting that, as I mentioned before, I came full circle with the South Texas projects. I also worked on Crown Point as well during my time with Uranium Resources back in the 80s and early 90s. This is another opportunity for us we see in the future. As Bill said, there's a lot of work to be done. Juan, Tafoya, and Marquez is one of those projects where with the Westwater acquisition, we were able to tie two projects together that are actually literally the same ore body across the fence from each other. And we're currently looking at these and updating our 43-101 on this to bring in more substantial resource here. Again, this is the future. Same with Nose Rock. As you can see from the picture, the EU, enCore has a property adjacent to Westwater. It really fills it out and really enhances our resource base. And then West Largo, Ambrosia Lake, which has if you're familiar with New Mexico, of the 700 million pounds of uranium that was produced out of New Mexico, most of it came from the Ambrosia Lake district. And there's significant resources left, and also it's very amenable for ISR production. There's an adjacent property currently owned by BHP Billiton that produced uranium at using the Stokes leaching for about 800,000 pounds per year. That's nearby where these properties are. So we believe it's also a leg to the future. And of course, one of the things that we're known for is our data. We have significant uranium resource data that comes from various sources, including the one I just mentioned that we just acquired from a private company. This really helps us when we're looking at, we can talk about all these other projects we have, but this helps us put it all together, but also helps us make what we have currently in our inventory to make it more prospective and more likely to get into production. And just a recap of our investment summary. As you can see, we have a clear goal to be the premier ISR uranium production company in the U.S. We have significant existing 43-101 compliant resources. As Bill described, we have a very strong team to support that. We've got leading positions in New Mexico for our future. We have access to, for the near term, to get uranium into production, uranium production through our Texas assets. And I believe we have a solid growth plan. And Michael, I think that's it. We'll turn it over to you.
All right, thanks. Let me get myself off mute there. This is the first chance I've had to talk to you since the closing of the Westwater. So I guess my first question is, what's the next step? You've talked about, getting the reserves up to 43 standards. We need to get a plan up and running. Are we talking to utilities about contracts yet? Walk me through what the next step is.
Yes. So yeah, we are. So we've got a multi-pronged strategy for the short term. So the first thing we're doing right now is just basically aggregating the company together with respect to the wastewater resources. As you know, we inherited a workforce. We're in the process of transitioning them into our organization. That's the short term. The next one is we're looking at the uranium resources that we have right in front of us for Rosita, and we're looking at we brought on a experienced geologist to help us map out how we're going to develop those resources to bring in Rosita into production. So we see, and then obviously bringing the Rosita plant up to commercial capacity is something we see occurring over the next 12 months. So all these are occurring within a 12-month window. Simultaneously, we know that the utilities are going to be coming back into the market in the near term, looking at RFPs. That's been kind of messaged by the utilities, as well as some of the experts in the market have been saying, talking about that. And I've already started reaching out to utility fuel buyers to at least get on to start the conversations with them. I don't expect to have contracts in hand tomorrow, but it would be one of the things we would like to do is have the ability a place to sell the uranium we could produce prior to actually going out and spending the money on developing these properties.
So you mentioned Rosita. The plan is still to Rosita's first. Kingsville will kind of explore what our options are there a couple of years down the road.
Kingsville there's a lot of opportunities with respect to the Kingsville Dome plant. The difference between Rosita and Kingsville is that Rosita has got a shorter timeline to get into commercial, to be able to put into commercial capacity. Kingsville's had a lot more operating experience, but as I mentioned earlier, it's very close to the coast, and as a result, there's quite a bit of work that has to be done to bring it back to standards where we could bring it back into operation right away. And so Rosita is the shortest path, and we see that getting getting the production facility ready to go. We see that as a critical path, and Rosita provides that shortest critical path.
So if some of our investors buy into the whole uranium prices are about to go up, and I buy into that too, but why should they feel comfortable that enCore is the one that's going to be one of the first movers, that this Rosita plant will really be up in 12 months? What advantages does enCore have versus some other uranium companies?
I'll start, and I may jump off, let Bill chime in, but initially I think it's because first of all, we haven't had to maintain these properties for years without any revenue. And so we believe that we're better situated right now to be able to make this happen. We have as Bill mentioned, that the focus of enCore for several years is to maintain a low cost profile. And we intend to keep doing that going forward, so that we believe that gives us a timing advantage and also ability to a capital advantage. And Bill, if you want to chime in.
Yeah, I was going to say, I think the main thing, quite frankly, is going back to the people, the experience. I mean, I myself, I'm not the technically oriented one. I'm a geologist by training, but relatively new to the uranium industry, having only been in it, a couple of decades, and that from the geology side, not production. But, having been there and done it before, quite frankly, and that applies to not just building the plant and developing the resources and implementing the business and executing on the plan, but from a corporate strategy point as well. One of the things that, I've failed to mention earlier, but we've heard from almost every analyst that we've spoken to, certainly a lot of them, that, this industry is crying out for consolidation. And I mentioned we've got 11 plants. There's, a half a dozen companies with a plant or two. And, they're all carrying a pretty good, healthy G&A burn rate. And when you look at the amount of production each one of them can handle, it's a pretty compelling business case for consolidation in the industry. And quite frankly, that's the way we built the last company. We did 5 major transactions in 30 months, propelling that incredible growth we had before. There's nothing wrong with that business plan. This time it's a little different. It's not just pounds in the ground. It's about production, and that's one of the reasons we came in and got 2 production assets very quickly. You save so much time on the permitting and the cost of the permitting, the time of the permitting, and the cost of the plants that, that's the key. When you look at the University uranium stocks, there are very few of them that actually have permitted production facilities. So that's a leg up. The expertise to run those and actualize them is even more lacking. So, those are the key elements. Certainly cuts down the CapEx, cuts down the timeline, and the track history is certainly one that would indicate we'll be able to execute.
So Bill, we shouldn't be surprised if there's other acquisitions down the line. You certainly got the balance sheet. You can do more.
Well, we've certainly, we've been looking for a long time, even during the hiatus when we were relatively inactive. We still looked at an awful lot of projects, be they individual one-off projects or companies and that sort of thing. And no different now. We've been in deep due diligence on several different fronts, nonstop, even while we're putting together the closing aspects of the Westwater deal. So, I can't say that anyone will accept proposals made, but I would suggest that proposals will be made over the course of the year.
Okay. I'm going to get back to the Rosita plant. And I understand the sensitivity of this question, but what uranium price do you think you need to get to for it really to make sense to move forward with the next step? And I guess it's either Bill or Paul.
Well, I'll kick it off, and if Bill wants to chime in, he can raise his hand or something. Well, first of all, we haven't published the PEA with respect to Rosita, so we have to, everything we state will be based on our experience, particularly operating in that area. We believe that Rosita and the resource that will be feeding it will be competitive with what we expect at the average expected production cost around the world. We certainly won't be Kazakhstan, but we will certainly be what we believe is competitive and what we expect the prices to be. So if one were to look at the all-in, the sustaining costs, we would be kind of right in the middle, I think. I think that the Trade Tech publishes what they call their production cost indicator. They have production cost indicator around $43 a pound, $43.30, and that number represents everything, not only including just the all-in sustaining cost, but the entire corporate cost and everything else. I think that we're somewhere south of that, but I believe that's a comfortable level for us, which would drive contracting and prices.
Okay, so we need the prices. We ideally want a contract in place before we start. How are you feeling about the reserves without doing more firming up? Do you have enough around the Rosita plant to move forward?
We have enough to get started, but we need to do more work to make it sustainable. We don't want to just go and produce what's sitting there right in front of us, because that's not enough to create, for lack of a better phrase in the uranium space, critical mass to be able to support continued production. Okay. So we would have to do more work, but that's not something this is something that this is in situ recovery. This is what you do. You put the drills out ahead of the production area, and you're constantly always adding resources and staying ahead of the decision-making cycle, as well as assuring that your regulatory and permitting is staying ahead of what you need to do. And there's always permitted well fields you have to go through. All that takes time, but the team we have, this is not our first rodeo to be able to do that. We can do that.
Okay, we do have a question from the audience. Let me turn to that, and it's basically talking about liquidity, and the question that talks about the institutional ownership and basically asks how much is non-trading cornerstone investors and how much is tradable. Can you just talk about liquidity as a whole of your stock?
Yeah, I think you're probably looking at about 25% of it that's not in the float or in the active float. Probably was a little bit higher, but we've got a very good core group of shareholders, both on the retail side and on the institutional side. Maybe a little bit higher, maybe 35. It's like anything else. When you're 6 or 7 cents for decades, or for a decade, better part of a decade, and then you get the shoe off of your back and you get close to $1 or at $1. Some people are going to take profits, obviously. And we expect to see that rotation in and out. It's very difficult with the with the volatility and liquidity that's come into the market to keep track of who those shareholders are. We try and maintain good communications with all of our shareholders regardless of size. But obviously when the market's taken on such a dynamic renaissance as it has in the last few weeks and months, it's very difficult to keep track of all of them and talk to all of them. But I would think somewhere in that 25 to 35% is probably very solid long-term, not selling no matter what type of, or at least not till fruition, shall we say.
Okay. Let's shift a little bit and talk about the uranium industry a little bit more as a whole. And you guys, Paul, you're participating on a panel tomorrow afternoon, so we'll get into that a lot more. But let me start out by asking it this way. We're seeing your stock start to move, and many of the other uranium companies. Are you seeing that backed by the pricing at this point?
It's certainly not being backed by the spot price right now. It's being built. I think that the equity prices are being supported by the expectation of what we see as the more overall long-term, not long-term, but the near-term market conditions that are going to drive the need to increase prices. But right now, obviously, the share price is certainly higher than it was a year ago at this time. It's probably better, nearly double, but it hasn't moved much since April of last year. So it's been kind of fluctuating around $30 a pound, but that seems to be acting as a support for higher prices.
You described the global uranium industry in terms of both being positively impacted for prices going higher by both the supply and the demand. So let's kind of separate those two a little bit and start out talking about supply. And maybe I'll ask a specific question. We've seen some shutdowns in Canada, the Cigar Lake and MacArthur. What's the latest you're hearing on Canadian production?
Well, the Canadian production is still shut down. Cigar is still shut down right now. Canada is basically producing 0 pounds a year, and so it's going to be a low production year, even if they brought back on Cigar. And the expectation is that Cigar will restart. As to the timing, that's really entirely up to Cameco and how they go about doing it. But I would expect them to restart, and because there's a high carrying cost for that facility, and they do need to get it, and they do have contracts they have to serve, and it's going to be their decision. But as far as the rest of the world, we've also seen production shutdowns elsewhere, in Australia with the Ranger mine closing down, and also in Africa with Orano's production out of Niger. And even production cutbacks in Kazakhstan. The Kazakhs put out a release yesterday, or this last week, where they talked about how they're producing, for 2020, they're going to produce 15% less than what they had targeted. And they attribute a lot of it to COVID-19, but they've also messaged that effectively don't expect an increase in production until we see prices increase. I think Cameco has also telegraphed that with respect to their messaging on the restart of MacArthur River. They've got to have higher prices before they'll go and spend the money to restart. And we see that those same type of conversations around the world. On the demand side, demand is continuing to increase, particularly in Asia in Asia. We see a lot of nuclear power plants being under construction and starting up. One interesting fact is we talked about Fukushima as a very, where it was characterized by reactor shutdown, not only in just Japan, but Germany, cancellation of new power plants being built. That's all changed, and right now there's more reactors operating in the world than there were prior to Fukushima, even with the Japanese industry being shut down. And now we're hearing messaging that there may be more restarts in Japan as a response to their energy crisis they've got going on right now. So we see the demand side improving, we see supply side contracting, and as a result, in order to get the supply to respond to the demand, there's going to have to be higher prices.
And then you quickly mentioned in your presentation the small modular nuclear reactors. Why don't you talk a little bit more about that?
I'll let Bill take that one.
Well, it's still a few years out. I mean, there are some around, and certainly in the early stages, but there's been funding from the government level in at least 20 countries announcing moves forward on small modular reactors. Certainly going to make an impact down the road. The Russians are probably ahead in the game, but it's certainly going to be a significant factor. It's not going to affect the supply and demand metrics over the next couple of years. But you look at that intermediate time frame to longer term, it's going to be a major factor. Here again, I think the safety acceptance, people don't think about it because it's not something that's going to see in the next few months or even in the next year or two. But with the segmented fuel rods that are clad not just down the circumference or down the outside of the cylinder, but in between certain lengths of the core rod. These things are developed out of after Fukushima, and they've been starting commercial testing this year by Westinghouse. And these sort of things are going to basically come up with a meltdown proof or certainly meltdown resistant core, which it's going to as you alleviate the safety concerns, you're going to increase the acceptance. And once you do that, you're going to see quite frankly, just the continued expansion in mostly first world countries that had kind of slowed down because of some of the safety concerns. You're going to see it resume its growth pattern that it had back in the 70s, which was quite aggressive.
I want to go back to the supply for a second. It seems to me like very little exploratory work is being done. If we really do get this quick jump in uranium prices, do we have the reserves to do it? What is the bottleneck? Will it be the processing, or will it be the reserves, or are they both an issue?
Let me jump in on that one just to start, and then Paul can back it up. But there's decades worth of uranium resources known that have not been produced, even under the most optimistic growth scenarios. Doesn't mean that we don't need better deposits. Certainly the high-grade deposits in Athabasca are worthy of searching, even though there's a little bit of a timing issue on permitting and all, but the grades are phenomenal. So there'll always be a case for exploration, and even some of our projects, we'd looked at high-grade breccia pipes in Arizona that need a bit of exploration. Most of the drilling we'll be doing will be on the development side, and here again, confirmation drilling for upgrading resources to 43101. But so there'll always be some exploration, but it's really not an exploration-driven market like gold or copper or many of the other commodities. I really think your bottleneck is in people. Permitting is a huge bottleneck in terms of most areas are, because of the safety concerns, make it very lengthy, expensive, and you have to have a lot of technical expertise to get things permitted. And then on the production end of it too, the in situ is a whole technical field that you've got to have the right people for. And going back to the fuel cycle, you've got to understand conversion, enrichment, and all of those things, because they are trade-offs in the pricing. And you really need to see all those things moving in concert for a good rally, and to keep a lasting cycle going. So those are the things to kind of look for. And then even on the reclamation side, you've got to have a certain expertise to reclaim a uranium mine that you don't have to have for a gold mine. So these are the sort of things that several bottlenecks, if you will, not just one, but certainly I think exploration is probably not the critical one of the group.
Okay. We are right up on our time limit. I could talk to you, ask you more questions, but I think we've got to say stop. So I'll just end it by thanking both of you for participating, and again plug our 5:15 Eastern Time industry call tomorrow if anyone wants to do a broader energy and the future look at. So thank you for participating, and I think that ends our presentation.
Thank you, Michael. Thank you.